My strategy, so I learned over time. So I first started investing in Bitcoin 2012-13. I bought it at $200 and I said, listen, this is a 10-year bet and I think it's worth, I did a calculation on stock to flow and said, I think I read the first ever macro strategy piece on valuing Bitcoin that became very well known at the time. I said, listen, this could be worth $1 million, but let's assume I'm an idiot by 90% and discount me down to 100 grand. So I said, look, it's a $200 asset that could be worth 100 grand. That's going to be the best investment anybody's ever going to make in their entire lifetime. So I bought it then. And I sold out in 2017 at about $2,000, which was much earlier than I should have done because I got confused over the forking and all of this stuff. And I didn't trade my plan, which was you just hold on. I'd already had a 87% drawdown. I was like, fine, I don't care. I'm treating it like an option. But then I sold out into that rally and obviously went up another 10x from there. And then I bought back in April 2020, and I probably bought Bitcoin at 6,500. And I thought, great entry. And then I've been long ever since. I switched between Bitcoin into ETH, owned some other assets as well. But I look back, and on paper it sounds like I traded well. Sold out in the big rally in 2017, bought the sell-off in 2020. If I'd have just held my original position, I'd have been 5 times better off. I'm like, and if I'd just used that long-term log trend, and every time it gets to the bottom of the log trend, if I'd have just added, I'd have been 25 times better off. So I'm like, okay, we have to think about these long-term trends in a different way, particularly these logarithmic, exponential trends. So I just held everything. And I started adding to ETH and Solana in June, and then again in October, and then again in January. So that's all I've done. And then I've done a bit of switching as I've started to look, okay, what do I think will outperform in the cycle? I bought a bit more Solana versus my ETH, but that's it. So I don't trade, I don't do anything. I used to try having a basket of crypto, but really what you end up with is a bunch of shrapnel in your wallet that you don't care about. So I'm like, listen, I'm just going to keep the focus bets on the things that have the highest probability. Bitcoin, ETH, Solana, I'm pretty comfortable with those bets. I own some XRP, I own some other bits and pieces. And again, I'm relatively comfortable, but they're not as big as the other bets.
Now, historically, you mentioned that you're more bullish on ETH due to network adoption and the capabilities of ETH with smart contract technology than you are of Bitcoin. But obviously, you're holding both, you're diversified. Are you still more bullish on ETH for this upcoming cycle?
Versus Bitcoin, yes. Just generally speaking, all markets follow the same kind of risk curve. So let's say you're coming out of recession. Usually what happens is treasury bonds do well because interest rates are being cut, that kind of stuff. And then what happens is investors want to take more risk. So they might go into corporate credit and then junk bonds and then emerging market junk bonds. That same cycle actually appears in crypto. It's exactly the same cycle. So what happens is early stage, crypto spring, nobody's sure, they buy the safest asset, Bitcoin outperforms. Then liquidity starts coming into the market, they start getting more comfort, they move out into ETH and some of the other larger caps. And then once liquidity is flowing, everybody's feeling confident, it really flows into the alts. And so that's exactly the process by which I think it works and will continue to work in this cycle too. Look, I think we know how much is held by the kind of FTX estate. So it's a known. Can you have, much like we're seeing with Mt. Gox stuff in Bitcoin, will you see, occasional periods of liquidation where, of course, but there's nothing we don't know. But what we do know is there's a lot of activity on Solana. There's a lot of people building. There's some great projects. The speed of Solana is, indisputable. And then we've got Fire Dancer coming at the end of the year into next year, which is a complete and utter step change for blockchains. So that takes Solana's potential TPS from 65,000 to 1.2 million. Okay, that's crazy town. So we've got an already bullish story of a blockchain that survived, right? Much like ETH survived in 2018. It was down 97%. Solana was down 97.5%. Very similar. But what's come out of the other side is a very strong community, particularly in the developer community, the applications layer and all of that stuff. And Tolly's proven to be a decent, high-quality leader and thought leader, been very reasonable, very conciliatory, non-tribal. And I think that's appealing to people. And I see Solana as really one of the only other chains that really is looking at the mass market adoption of cryptocurrency. Different chains have different purposes, I think, or narratives, but that's Solana's. And if the Fire Dancer goes well, then okay, that becomes a big deal. So that's why, I'm very bullish on that, because as you know, each wave, the larger tokens do less well each time.
Yeah.
Because they have more holders already, more is priced in, the economic activity, it just becomes a rate of change game. So the rate of change of ETH was the big one for the last cycle of the major tokens. For this one, could it be Solana? Maybe I'm wrong, but that's my idea here. Of course, there'll be tons of others that do 100x. I'm just not good enough to figure out what those things are. That's too difficult a game. So I just play in that very big bucket and just think, how do I allocate amongst those? I actually think it's going to be everything, everywhere, all at once. So what I mean by that is I think there's several layers of adoption that is being built by teams right now. One is the finance system, payments, right? We're seeing everybody from all of the payments platforms to stable coins. There's a lot of payments architecture, CBDCs. Who's going to go first? India's building its out. Singapore's building one. China's building one. The Europeans want to do it. The UK wants to do it. So we know that's coming. That's all on blockchain. And then we're seeing the rise of the institutions building tokenized money market funds, people like Franklin Templeton. And stuff like Fire Dancer and Solana may be giving opportunities for the finance system to use it in broader ways. So we're seeing the finance system get involved. The finance system itself is going to be investing in the space. So we're seeing pension funds. I just interviewed the guys from Texas Teachers, for example. They're investors in the space. They were pioneers. We'll see more of that. I think stable coins continue to grow. It's basically a tokenized euro dollar. It means anybody in any country can get access to dollars. So that's a very big deal, considering 87% of world trade is in US dollars. So that continues to grow. Then I think we see the further applications of NFTs. So NFTs right now we know is digital art, which was the proven use case of that you can create digital scarcity on a blockchain. So therefore, in an increasingly digital world, not everything goes to zero in value, because we can make anything digitally in infinite numbers, including with AI knowledge. So what we're going to do is create some scarcity. So that was what the art movement was. PFP showed about community and Web3, but NFTs are basically contracts or deeds in an electronic world. So I think that's ticketing. I think that's insurance contracts. I think that's real estate. I think that's a lot of things. So I think we'll see more use cases. DeFi itself. DeFi, we saw the blow up of CeFi. So we understand the fragilities of trying to build a CeFi system on an 80 volt asset. So in DeFi, I think it splits. I think we get more attention to DeFi, but it splits. One is institutionalized DeFi, which has KYC AML, because they can't use it otherwise.
Right.
But once they do that, and everybody's working on that, then we'll see massive liquidity provisions from the people who already provide liquidity to financial markets, banks, big super funds like Apollo and stuff like that, will start providing liquidity, and the big hedge funds, to the lending markets in crypto via DeFi. So that's the money markets essentially. But we'll also see the more kind of traditional crypto native side of DeFi continuing to develop, the Aves of this world, and the makers and all of that stuff continues. And then the derivative exchanges, DXDY, Deribit, all of this kind of stuff. So, and the final part of the equation is I'm seeing still a lot of brands and cultural communities interested. So that's sports, music, fashion, entertainment. And I think all of those will grow into the space once they get through this. Everyone's a little bit insecure about the market right now, and nobody's got much money for marketing budget, but I think we'll see the rise of that. So I think all of these come together this time, because I think most people did the work in the last cycle. Then the cycle, the cycle died off, but I think most people have teams, Web3 teams, across all of finance to big brands, and they're ready to activate. They're just waiting for more liquidity to come back and a bit more certainty. So I think the narratives will be broad. Sure, there'll be some breakout narratives. The other one is gaming. That's the other one a lot of people are waiting for, is how gaming fits in. So there's a lot of narratives coming, and I think they'll all come together at the same time, which will make it, I think a lot of people will have the light bulb moment this time around.